This is Fintech Insider News. This week, Barclays backs UK AI innovation with investment in CommonAI. Monzo partners Fair4All Finance on cards for Brits with poor credit scores. And Stripe and Lloyds debut payment suite for UK small businesses. We'll be tackling all of this and more on today's news show, so don't go anywhere.
Hi, Diva. It's Rachel.
And Jordan. Yeah, hi. Quick question.
Why are you not spending your Venmo balance?
Yeah, we're concerned.
You can, buy stuff with it.
Ugh, you love buying stuff.
And earn cash back on eligible purchases.
You love purchasing eligible things.
So the money your friend sent you yesterday, that's today's ramen or rideshare or eye patches.
The skincare kind, not the pyro kind.
Spend with Venmo, then you can earn cash back with Venmo Stash. Venmo Stash bundle terms and exclusions apply. Max $100 cash back per month. See terms at venmo.me/stash terms. ID verification required to use a Venmo balance.
Hello and welcome to episode 1072 of Fintech Insider News, brought to you by 11FS, the sixth-time consultancy of the year that works with financial providers big and small to build the next generation of financial services. I'm Laura Watkins, Director of Media and Marketing here at 11FS, and to help me unpack the biggest and most interesting stories from fintech and financial services from the past week, I'm joined by a brilliant panel of guests. First up, we have a welcome back to the show for Mei Lim, Group CFO and Managing Partner of Anthemis. It's great to see you again, Mei. Can you remind the listeners a little bit about yourself and Anthemis?
Thanks, Laura. Really great to be back here again. Thanks for having me back. So, Mei, Managing Partner at Anthemis. For those who don't know us, Anthemis is a VC investor. We've been investing for 15 years. We have about 150 portfolio companies in the US, the UK, Europe predominantly. The thesis is around invisible finance and more recently now high assurance AI. We have a lot of investments as well in diverse founders. We're a big supporter of DE&I, and we are based both here in London as well as New York. We recently co-founded a platform called CommonAI, which we launched in September last year, and I had the privilege of coming to 11FS to talk about that. So excited to be here today to talk more about the developments we've had in CommonAI.
Absolutely. Well, thank you so much for joining us. And yeah, we will be getting right into that very, very shortly. But next up on the panel, we also have Deanna Kamil-Salmon, Associate Director at Fair4All Finance. Welcome to the podcast. Please, can you tell us a little bit about yourself and Fair4All Finance?
Hi, Laura. Thank you. It's great to be on the show. It's my debut. I'm so excited for that. I am the Associate Director of Commercial Propositions at Fair4All Finance, and Fair4All Finance are a not-for-profit organisation that was set up in 2019. So our remit and our goal is to focus on financial inclusion in England. There are over 20 million people in financially vulnerable circumstances who need support and access to products and services to improve their financial lives. So the work that we do is around funding and developing pieces of research to identify the gaps and the consumer needs. We also innovate and partner with organizations who deliver products and services directly to people. So we kind of fund innovation in the sector, like the partnership with Monzo, which we'll be hearing a little bit more about later.
Fantastic. Well, thank you so much for joining us. That is a scarily high statistic there. So, thanks for being here and for all the work that you do. And we will dig into that very, very shortly. But last but not least, concluding our panel, we have Merusha Naidu, Global Head of Partnerships at Paymentology. Welcome back. For those unaware, please can you remind our listeners a little bit about yourself and Paymentology and your role there?
Yes, thanks for having me, Laura. I must say, it's always a privilege to be a part of the 11FS podcast. Merusha Naidu, Global Head of Partnerships. I look after all of the strategic initiatives with all of our partners across schemes, capability partners, as well as resellers and distribution partners. When you look at Paymentology, we've been in the news quite a lot recently with our recent investment, the launch of our new platform. But ultimately, Paymentology is a global next-gen issuer processor. We believe that infrastructure is the way to unlock new digital technologies across all financial services, and we sit at the heart of that. So it's really brilliant to be here and excited to unpack some of these exciting stories.
Absolutely. And on that note, let's jump right into the first one. So our first story today is that Barclays has backed UK AI innovation with investment in CommonAI. This story in Finextra. Barclays has invested in CommonAI, a collaborative engineering and computing platform launched by Anthemis and Cambridge AI venture partners to support the growth of AI-enabled businesses across the UK and Europe. The platform brings together startups, enterprises, engineers, and academics, providing access to AI models, training data, hardware design, and computing power that might otherwise be out of reach for many organizations. Alongside the investment, CommonAI is launching a new high-assurance AI program focused on developing AI systems capable of operating safely and autonomously in highly regulated sectors such as financial services. Barclays will join the program as a member, using the platform to explore strategic AI use cases and industry-wide challenges. Well, obviously, it makes sense for me to come to you first, May. Thank you so much for joining us. Huge congratulations on this investment. Can you just tell us a little bit about the sort of problems that CommonAI is trying to solve here and the sort of benefits of having a shared platform?
Yeah, thanks so much, Laura. And again, super excited to come back here to talk about our next milestone. We're really grateful and excited to welcome Barclays as an investor as well as a member of our high assurance program. So a little bit about CommonAI and what it's trying to address. At the heart of it, we're really trying to address some big problems with solutions that are very inclusive. And so we're trying to really solve AI and move it from pure experimentation into something that can be trusted and applied in real-world settings and safely deployed. And to do that, it's really hard to solve these large problems in isolation. And using a collaborative platform like CommonAI, we are able to bring together, a really diverse set of participants, whether that's AI startups or large corporates or even the government, and bring all of these relevant participants who are all relevant in solving these problems, but doing it in the most efficient way. And the way that we think about doing it efficiently is, let's not build a lot of these solutions in isolation. Where things can be built in common, let's do that in common, because resources are finite and we need to prioritize them properly. And so where there are things which are common, let's build them in common and let's build them together in the best way possible, sharing resources, which allows us to focus on the stuff that's more important. And some of the examples of things that we're trying to solve for, we have 2 programs now on the platform. The first one was scaling inference that I came in February to talk about. And inference, what we mean by that is, the world of AI has moved on from just pure training of the models. Now, every time you hit a question into ChatGPT or Gemini, that's where the model is really thinking and applying its knowledge into answering the question. And there again, compute energy, that's really finite. We need to figure out how we answer and apply the knowledge in the most efficient way possible. And that's scaling inference. And then now we move into high assurance, which is if we're doing things efficiently, let's do that with accuracy, explainability, and especially using those methods in a regulated framework. And that's where, institutions like Barclays, but also other regulated institutions are really excited about adopting this, because for them, one of the major prohibitions or obstacles to adopting AI at scale is this fear that actually the model is going to hallucinate, or I can't explain how the model came about with the answer. And that's really important for the regulator, but also regulated industries.
Fantastic. I mean, it's such a an enormous undertaking what you're doing, but I really love, like, CommonAI is living up to its name, building sort of everything with lots of different inputs so that it's as accessible as possible for everyone kind of involved. And maybe, Deanna, coming to you on that kind of consumer perspective, how important is that trust issue that May mentioned there in terms of embedding AI into financial services? It is something that gets called into question a little bit in terms of how much the AI is trusted and also how much people trust the AI itself. What's your take?
I think that's a really, really good question. Probably the one that is even more on our minds at Fair4 Finance is around the way that the models have been trained and the kind of existing biases that we already have in our society, and ensuring that those don't continue to live on in the models and the way that we automate systems and things like decision making around who gets access to certain products and who doesn't. So I think that trust element is also kind of an interesting point. But from a consumer standpoint, we hope that there are lots of ways that usage of AI can improve people's financial lives. And I think there's lots of ongoing work that's happening on that. But some of the risks and challenges are, how do you ensure that some of that kind of algorithmic bias doesn't continue? How do we ensure that some of those kind of data privacy points, that people's data is protected, that if they're trusting an AI agent with certain tasks or asking questions that are really specific to their financial situation, that continues to be, that they're able to keep that data safe. And just thinking around the different points of, how can people make sure that they are trusting the data? As kind of May mentioned, I think there is a bit of a worry about, is what I'm getting back correct? Does it need to be validated by someone else? Is it possible that that's a hallucination, which obviously doesn't happen as frequently, but those are the concerns that people will be having at this point in time.
May, would you like to kind of come back on any of that as it relates to CommonAI?
Yeah, I mean, I totally agree, Diana. Trust is super important within AI. Trust is, one of the key tenets, right, of the financial services system. Without trust, you don't get credit, right? And so for us, coming back to your point around making sure that the results of an underwriting decision is auditable is really important, and applying giving transparency to the black box is really important, so that you can actually test whether or not there has been an inherent unfair bias that's resulted in a decision that has unfairly affected a consumer. And that's where the regulator is really concerned about. And, some of our conversations that we've had with some counterparts at the banks, that they are acutely aware of the hallucinations that potentially come out of the models. For them, anecdotally, they said, we're one hallucination away from getting fired. So this is how important banks are taking it. And actually, you can actually see where the head of AI used to report into the CTO, and now we're seeing their reporting lines changing, and they're reporting into the Q function. And so you see this visible shift where actually AI is treated not just as tech, but actually something that actually is going to be deployed within the BAU operating context and is taken very, very seriously.
That's really interesting. And Merusha, I want to bring you into this conversation, particularly, with your role in partnerships and working with banks and fintechs who are sort of looking at their AI strategy. May sort of touched on some people's sort of hesitancy around this area. What are you kind of seeing in this space? What kind of areas are people experimenting in, and what's sort of holding them back, if anything?
Great question. And I must say, just looking at what May just said around, AI moving from a technical function into more operational, that's exactly where we're seeing it move into. When we look at our customers, and it's predominantly, very ambitious fintechs and large-scale digital banks, or T2 and T3 banks who are trying to evolve to meet the customer's digital needs, we're seeing customers shift from experimentation into deployment. About a year or 18 months ago, banks were saying, what do I do in this space? Is AI really going to transform my business? To now, we're seeing it actually come to fruition. We're seeing a lot of banks actually use AI to create operational efficiencies across the business, whether it's around customer supporting tools, so creating more AI chatbots to kind of resolve tickets, first time, first interaction with the customer. The other use case that we're really seeing is around fraud prevention, trying to really tackle these kind of bad AI agents who are now surfacing. And so we're seeing a real move into, execution of AI, but in a very intentional way. If we look at the way that our banks and our customers are using AI, they're being very intentional around how they are using it for risk monitoring, fast decision making, so that they are able to reduce fraud. They're able to identify fraud patterns earlier and just improve things like dispute management functions. So it's definitely something that we're seeing it's no longer talked about. People are actually doing it. It is creating operational efficiencies across specific segments within banks and fintechs. And what we can say is it really is creating a better customer experience, because what AI is able to do, obviously, is crunch the data really quickly to give customers faster responses that actually answer their questions and help resolve many of these pain points for customers that customers typically had with customer service tools that were used in the past.
May, I want to give you the sort of final word on this. Like, does that kind of match what you're seeing? Where do you think we're kind of going to have the biggest breakthroughs with AI in the immediate future? And what do you think is the biggest misconception of AI in financial services? And how do we kind of myth bust that?
Yeah, so I think, myth busting, there is definitely a preconception that AI is going to take jobs, and vast swathes of the population are going to be cut out of this technology shift. But actually, AI, when used safely and deployed appropriately, can actually augment our productivity. And in part, platforms like CommonAI is designed to make this as inclusive as possible and allow adoption through, fractional services like the CommonAI platform to allow people to upskill quicker, to participate in the ecosystem in a more inclusive way, and to start things and adopt AI tools a lot quicker. So coming back to what Merusha said, yeah, we're definitely seeing AI being used a lot within the financial services context around operational efficiency, fraud detection, on the revenue line, making decisions quicker as well, but also in the back office as well. This is where I think AI is going to be adopted more at scale, which is AI is being used to write code and automate the sort of upgrading of code. But I think where things like high assurance tools come in is to ensure that actually those codes that are being written properly and accurately and safely. And sometimes actually, people think about AI as being things go a lot quicker, but actually AI can also be used to put a little bit of, the right amount of friction in the system to stop things like fraud from happening, to stop inappropriate data getting leaked out. And also, AI can also be used, weirdly enough, to check other AI models as well. And so, to sort of benchmark whether the first AI model is producing the right results, or to actually mathematically calculate whether an answer is correct or not. But I think at the heart of all of this, what I always say with everyone is, I think, especially for the newer generation who rely a lot on AI, ChatGPT, things like that to get fast answers, fast food, sort of bleeding into that. Critical thinking is going to be absolutely paramount to make sure that people can actually assess themselves whether something makes sense or not, and put their own sort of bit of friction into the process.
Yeah, that's such a good point. And I enjoyed the fast food analogy for sure. But I think, we could definitely pick your brains about this all day, but unfortunately we have other stories to cover. So I'm going to move us on. But, huge congratulations again on the investment from Barclays, and look forward to seeing what you guys do next, and come back and tell us about it when you do.
Thank you.
But I'm going to take us to our next story, as promised, which is that Monzo partners Fair4All Finance on a card for Brits with poor credit score. So Monzo has partnered with Fair4All Finance to pilot a new version of its Flex Build product aimed at helping people with low or limited credit histories access affordable credit and build stronger financial track records. The product allows customers to unlock a small credit limit of up to £250 through an upfront deposit. Customers pay no interest if they repay in full each month, and regular repayments can help them access higher limits and eventually reclaim their deposit. Monzo will freeze spending if repayments are missed, where Fair4All Finance is providing a partial lending guarantee of up to £7 million to support the programme and share risk. Before we jump into the discussion, we spoke to Luke Enock, General Manager of Borrowing at Monzo, who sent us a soundbite to share his thoughts about the partnership. Let's hear from him now.
Hello, this is Luke, General Manager for Borrowing at Monzo. This week, we announced an exciting new partnership with Fair4All Finance to widen access to affordable credit in the UK. Right now, more than 16 million adults face barriers to borrowing. And when people are turned away from mainstream credit, they're often left with options that don't really help them move forward. That's the problem we're trying to tackle with Flex Build. It's a credit card for people with low or limited credit scores that can help them build a repayment history and progress towards mainstream credit over time. Together with Fair4All Finance, we're piloting a secured version where customers pay a one-time, interest-earning deposit to unlock a small, affordable credit limit. Importantly, the product is designed to give customers clarity and control, with transparent costs, in-app education, and extra safety nets. Plus our delightful touches of design throughout that encourage on-time repayments and celebrate progress. For us, this is about making money work for everyone, and we're really proud to be working with Fair4All Finance to build a more inclusive credit system in the UK.
Deanna, I want to come to you first. Obviously, this is a fantastic partnership. We've obviously heard some of the details from Monzo's side, just there from Luke. But I'd love to kind of dig into it from your side, particularly that stat that you mentioned at the very, very top of the show around 20 million people in the UK living in financially vulnerable circumstances. Can you just unpack that a little bit more and kind of the barriers that they face while trying to access credit and how this will massively help them?
Yeah, absolutely. I mean, just to echo Luke, we're really, really delighted about the partnership with Monzo. We think it has the potential to reach thousands of people that would have been previously excluded. And the reason why this partnership is so important and what we're doing is so important is because of the scale of the issue. So I've referenced 20 million people in financially vulnerable circumstances, and around 16 million of those struggle to access mainstream credit. So that group of that 16 million people is made up of people who either have an impaired credit file, which means that something might have happened to them in their life that has impacted their credit score. And that can really be anything from you forgot to pay a phone bill and you moved house and they chased you to your old address, and then you found out that you've got a CCJ, a court-counted judgment against you, which now has impacted your file for the next 7 years. Or it could be that you were having a bit of a mental health crisis or something going in your personal life, which meant that you were late on payments for something like a credit card. So there is, probably a billion different reasons that I could come up with where that could happen to somebody. But what it does mean is that if your credit file is impaired, it makes it really difficult for you to access credit from mainstream providers. And then there are people who are new to credit. So again, that could be anyone from a young person in work or not in work, an apprentice, a student. Frequently, it's also people who are new to the country. And that actually impacts lots of different types of people, not only people who are new to the country who potentially are kind of working as skilled labourers, but it could also impact people who are experienced hires, professionals. I've recently spoken to somebody who moved to the UK from the US. They were working in a really impressive investment bank, and they were struggling to get access to credit because they hadn't developed a credit score in the UK. So it's an issue that touches all different types of people, and it's too large to be able to be fixed by any one institution or organisation. So although Fair4All Finance have a long history and track record of investing into community finance organizations like credit unions and CDFIs, and for listeners that aren't familiar with those organizations, because many people aren't, they are purpose-led organizations who focus frequently on trying to support people either linked with a kind of common bond or a same profession. That's what kind of credit unions are focused on. And CDFIs focus on supporting people in financially vulnerable circumstances. Unfortunately, those sectors, although they're growing, they're too small to be able to reach that entire 16 million group. So a new part of our strategy at Fair4All Finance has been to partner with kind of mainstream and digital banks to enable them to serve people who've previously been excluded. Now, we've spoken a little bit about some of the challenges of that. Like traditional underwriting models can be quite set, and a lot of the way that people look at risk and risk-based pricing means that they think that this customer group of people is just too difficult to serve, and it requires quite a lot of kind of systematic changes organizationally, culturally, but also from a systems standpoint. So what's really exciting about this work with Monzo is that they've said that they'd be willing to try to kind of serve more customers than they've been able to previously. And we've come in and said, you know what? We think there are some myths about this group of people being really difficult to serve and that they won't pay back. We think they will pay back, and we're willing to provide a partial guarantee. So in essence, what that looks like is Fair4All Finance and Monzo are kind of sharing some of that risk to be able to enable them to innovate and to serve this customer group.
Fantastic. Well, it's such an amazing initiative, and thanks for sort of unpacking that for us. And obviously, you know, if you're looking to partner with mainstream and digital banks, you've sort of hit the jackpot by teaming up with Monzo for sure. So yeah, I'm really excited to see how much this can really, really impact people. Merusha, kind of coming to you, you were just really nodding as Deanna was talking there. What's your kind of take on this, and what sort of stands out to you about this partnership?
So firstly, as an avid Monzo customer, this is such a great initiative. And this hits home for me personally in so many different ways. I moved to the UK, and being, a skilled worker in a professional setting was not I didn't have any credit facilities available to me. So when I look at initiatives like this, it's so important, Deanna. And when you talk about, all of the different customer segments who fill out the 16 million, I mean, you get people from every different walks of life, but also vulnerable individuals as well as true professionals. So I think you're really hitting the right notes around, this is a particularly underserved group of people. There is definitely a need. And what I really love about this partnership is you're kind of putting your money where your mouth is to say, Monzo will stand with you and will be a true partner in making this product work. So for us, especially from a partnership lens, that's the perfect kind of partnership because it's mutually beneficial. You've identified the pain points. You created a purpose-driven product that actually meets the needs of customers on the ground. And when we look at, successful ecosystems and successful product plays, those are kind of all the keynotes. It's all about, is there a purpose? Is there the right platform and the right model? Do you have the right partnerships? And then, what is the outcome or the success metrics? And I think that, when we look at this, it's really driving inclusion in a way that we would love to see all over the world, right? Financial inclusion from Paymentology's perspective is extremely close to our hearts. We work with banks and fintechs and a wide range of customer segments. And the most successful approaches we see is when providers design products around those customer journeys rather than just individual products. The goal really shouldn't just be around getting somebody access to credit. It should be around, helping them access opportunities for today and tomorrow. So, just really excited about this product. It's groundbreaking from my perspective.
Thanks, Merusha. Some very kind words.
I think you need to bring Merusha on board to be your your marketing person.
Your cheerleader. Yeah.
Love it.
Anytime.
Love it.
But Deanna, maybe we can talk about that in terms of the sort of stepping stone piece that Merusha was talking about there. This isn't just sort of helping people in a pinch. It's also supposed to, take them on a stepping stone into getting mainstream credit. Sort of how important is that to the kind of overall objective, and sort of what does that look like from your perspective?
Yeah, absolutely. I think Merusha touched on it a little bit. I think what's really exciting for us about this pilot is it's that longer term impact, not just for the consumer, but also for the industry. So the way that we kind of hope this changes over time is for customers accessing this product, they build that track record with the lender, and they are then able to progress to other and often cheaper products. And then over time, they've got this established track record and they're borrowing in exactly the same products that are available to us on the call. Although I'm making some assumptions about people's credit score and the way that they can access credit, but you understand what I mean, the kind of a mainstream product. And what was really exciting for us with the kind of partnership and the way that it developed with Monzo was kind of a very clear pathway to their mainstream product that's available to people with often in the industry called prime credit scores, but also this notion that you actually have to save to be able to borrow. And there's a really interesting behavioral link there around people kind of saving alongside borrowing. There's lots of really interesting research around this, including something that an organization called Nest Insights published recently around the kind of psychological impact that has on people's ability to kind of save alongside borrowing or save to borrow. There's lots of different models. And we think that that element of it is really exciting because as Merusha said, I think credit, ultimately, I think people that want access to credit should be able to access credit. And they should be able to do it in the way that suits them. But ultimately, the ideal is for people to have savings, for people to be able to save. And if they've got an emergency, something that comes up, that they've got savings that they can rely on. Reality is 1 in 5 people in the UK don't have £1,000 in savings. So if something like your car breaks down or you've got another emergency boiler breakdown, it's really difficult for some people to be able to find that money to be able to make that happen. So we're really excited about this piece of work. And probably what I should mention as well is that it's been a really interesting example of us partnering with Monzo, but also having a great level of support from the National Strategy for Financial Inclusion that was published just last year by our government. And they actually named this initiative, the Small Sum Lending Pilot, as one of their key strategic priorities in the way that you can improve financial inclusion. So as a result of that, we launched this fund with up to 25 million available for banks to bid for to kind of support innovation and reaching people who were previously excluded. But it's fantastic to have Monzo as the first lending partner on that pilot.
Absolutely. Well, huge congratulations again. And yeah, really, really excited to see how this one rolls out and continues to positively impact people's lives. But on that note, we're just going to take a quick pause. Back shortly.
This episode is brought to you by Versed, guys wear that guys wear. This Father's Day, Versed has something for dads who can activate vacation mode anytime, anywhere. The Versed Resort Collection, versatile enough for a tropical getaway or a well-earned staycation. For dads who turn a grill into a buffet with the click of the tongs, a backyard into a water park with just a sprinkler, and are definitely not asleep on the couch. They're resting their eyes. Versed, fit for dads, only at Dick's.
One crunchy bite of a Hershey's cookies and cream bar, and I'm taken right back to college move-in day. I was a little overwhelmed by the newness of it all. Boxes were everywhere, I needed a break from unpacking. But just as I was able to take a breath and open my Hershey's cookies and cream bar, my new roommate Rachel walked in. I offered her a piece, but she said no. Then after a beat, she said, "Actually, those are my favorite ones." We laughed. The ice was broken, and we've been friends ever since.
Hershey's, it's your happy place.
Before we get back to the news, we wanted to tell you about an event we're hosting this month. We're teaming up with Paymentology for a special open mic night all about the next era of payments. It's happening on Wednesday, the 24th of June at the Joiner on Worship Street in London from 6 p.m. with free food, drinks, and plenty of fintech folks in the room. If you fancy joining the conversation and maybe even grabbing the mic, head to the link in the show notes and save your spot. But before you do that, carry on listening to the show. Our final main story this week is that Stripe and Lloyds have debuted Payment Suite for UK small businesses. This story in payments, Stripe and Lloyds Bank have partnered to launch Lloyds Accept, a new payments offering that gives small businesses access to Stripe's payments infrastructure directly through their Lloyds business account. The service enables merchants to accept payments in person, online, and via payment links, with onboarding completed in minutes. The article highlights a growing trend in financial services where banks increasingly partner with fintechs to deliver modern capabilities to customers, combining distribution and trust with technology and product innovation. Well, given that we have a partnerships expert on the show, Merusha, I'm going to come to you first. This kind of feels like a really good example of a bank and a fintech playing to their respective strengths. Firstly, what did you think of this partnership? And is this a trend? Are we going to continue to see a lot more partnerships like this one coming through?
So, firstly, absolutely. So, when we look at the evolution of financial services right now and how banks are rethinking, creating, services for whether it's consumers or SMEs, they've all understood one thing: you can't build everything yourself, right? And so what I think banks have finally realized is that they need to actually focus on the customer experience and outsource, very specific tech to fintechs who do it really, really well, who can build, at pace, and they can also evolve with the growing needs of customers. So I think that's the first thing that we're seeing. That trend has been ongoing, but now I think the banks are finally accepting it. When we look at this story in particular, so a couple of, call outs from us. So the first one is SMEs is and has always been an underserved segment. That's the reality, especially when you look at not just SMEs, but micro SMEs, influencers. All of these make up the same space. But what is not changing is what customers expect from these SMEs, right? Customers expect the exact same level of service, the exact same level of access, while at the same time also expecting the same level of trust and security. So I think this is a perfect partnership again, because it's wrapping around all of these services into one. And when we look at Stripe, particularly, they are growing more and more into an ecosystem orchestration platform or infrastructure provider to enable all of these key features for the different customer demographics. So for us, this is a very positive move.
Fantastic. And maybe coming to you on that sort of, the point that Merusha made about, institutions realizing that they can't build everything themselves. They've got to partner, they've got to share. That sort of, sounds like a very similar ethos to what you were telling us about CommonAI. What was your take on this one, and where do you see this heading?
So yes, this is about collaboration. As Merusha said, everyone needs to play to their strengths. So why not partner up with somebody who together you both can augment each other's capability? But equally, I think at the heart of it, it's around giving their customers, the SMEs, the ability to give their own customers the same experience that larger corporates are able to do. And that way, by doing so, able to attract and retain new customers. And it's, a way of democratizing access to services, from the small independents, who are increasingly getting crowded out, by the big brand names. So this is really, really exciting news. And I think something that is exciting for the UK economy. The UK high street and the small SMEs, they need as much help as they can to do this in a super slick way. By partnering up with Stripe is very encouraging to see the UK economy do things like this.
What's your kind of take, May, on the kind of claim that through this sort of thing, small businesses can access the same infrastructure as an Amazon or an OpenAI? Like, what does that mean in practice? Is that kind of true democratization if the smaller brands, the high street shops, etc., can access the same level of support and technology as these huge organizations?
Yeah, I mean, the devil's in the detail. The actual, payments infrastructure seems super slick, and that's the beauty of it. But actually behind it, there are lots of interconnecting pieces, which can be quite clunky, can create a lot of friction, can have actually quite a some absolute costs rather than just margin costs. And so, again, the devil's in the detail as to whether when this is rolled out to the small SMEs, it remains affordable. And if there are issues, if it's clunky, whether they're able to access the same level of customer support that, the larger corporates are able to access.
Yeah, and that sort of customer support bit is probably going to be the most important, particularly, when, as is often discussed, cash flow is the lifeblood of SMEs. You need answers, you need them quickly, particularly if there's, any kind of hold up in the system that affects your cash flow.
Exactly.
Deanna, what was your take on this one? Obviously, this is a sort of example of a traditional bank sort of having to rush to modernize through partnerships. Is that a sort of customer-led driving force, do we think, in terms of customers changing their expectations, in terms of, as sort of Merusha and May have alluded to, of what they actually expect from these small businesses?
Yeah, I think that was a point that was really well made by both Merusha and May about expectations growing. And I think as we kind of spoken about, people often talk about small businesses being the backbone of the UK economy. If we talk about some of the figures, 99% of all businesses are small businesses. If you drill down further, over 50% of all businesses in the UK are actually sole traders. So kind of, one person doing something. It could be a plumber, it could be somebody who is a content creator. There's lots of different ways that people can do that. And so this is why access is a really important point. I think it's both linking it back to the original point of access, people's own financial health and resilience, their own credit score, their access to payment systems that work well and being paid on time and being able to kind of invoice and pay vendors and receive payments on time. All these things are interlinked in how we kind of improve growth, which I guess has been a bit of a buzzword for a little while now.
Yeah, absolutely. But Merusha, if we kind of take the Stripe element of it and we kind of look at that in isolation, Stripe is kind of almost looking like an essential piece of financial infrastructure at the moment, and they've made some very large partnerships in recent years, obviously with Lloyds in the UK, but taking it more internationally, Goldman Sachs, Citi, Fifth Third in the US, and also UAE neobank Wio to look at SME kind of support in the UAE. So they're not just sticky in one industry and one geography. Like, how impactful do you think this kind of infrastructure play could be at an international scale?
So I think it's extremely important, because Stripe has, like you said, the global scale. So they're able to take this infrastructure and create kind of access for SMEs globally. Right. And if you look at, the list of banks that you've just mentioned, they're already doing that for some of the largest, fastest growing banks globally. And let's look at Wio as an example. So we also power Wio in the Middle East, and Wio was the fastest growing digital banks for SMEs across the CEMEA region. Now, partners like Stripe really help to enable that infrastructure, because some of the most influential companies in financial services, they don't have the capability to rebuild every time they want to add on new functionality. And so using, an amazing platform like Stripe, they're able to very easily tap into the technology that they need without having to rebuild everything themselves. So when you look at the type of infrastructure that Stripe has created, it's really infrastructure at scale, and it's basically enabling entire ecosystems across the board, whether it's a bank, whether it's a fintech, whether it's, other SME segments. They really are, enabling. And interesting connect, if we look at, the Stripe use case and what they are building and what May and the team have done with CommonAI, it's very similar. It's creating an orchestration layer to create access for multiple SMEs. It's just a different segment. So more increasingly, you're seeing the industry shift towards creating these different types of infrastructure to unlock services across the board. And that's what we love to see, because inclusion, and I think all three of these stories really talk about inclusion, but with a different lens. And that trend is probably one of the most exciting we're seeing in financial services.
That's such a good point. Like the connection between all of our stories, but also that kind of investment in inclusion, and often inclusion is enabled by easy onboarding, easy access, sort of frictionless access to these services. May, what was your take on that? Like kind of the sort of emphasis on speed and simplicity being such a game changer to open up access.
I mean, this is really important for, the business banking community, which is, as everyone said, has been, oft overlooked. And, it's really important that we continue to support the SMEs because, like as Diana said, 99% of these SMEs are the lifeblood of the economy. And I think, this is really important for the UK economy. We need every help that we can get. And so, coming back to, I think, some of the key threads here, we're seeing, the government through Diana's piece, supporting these kinds of initiatives like cross-subsidizing and encouraging the Monzos of the world to enter this. We're seeing Lloyds, offer this kind of service. Behind the scenes, the UK government is, I'm sure, encouraging large institutions like this to be inclusive to the SMEs. And even coming back to CommonAI, this week was London Tech Week, and you'll have seen the UK's 1.1 billion budget allocated towards AI hardware, which is, sort of the physical and digital infrastructure that's really important for the UK economy.
What we're saying is basically all of our stories today are talking to each other around inclusion and access and the vast impact that can make on the UK economy and economies around the world when these things all come together. So on that note, we're going to take a quick pause, back shortly.
This episode is brought to you by Starbucks.
That is fire. Whoa, that's good.
This might be the drink of the summer.
Okay, I like this one too. I'm rocking with it. Okay.
Try it for yourself. Starbucks Refreshers concentrates are coming home. Find them in the coffee aisle and make it yours.
Okay, now for a quick look at a story we don't have time to cover in full today, and that is that Aviva detects record £230 million in bogus insurance claims as use of AI rises. The story in The Guardian. Aviva says it detected more than £230 million worth of fraudulent insurance claims last year, identifying over 18,000 suspicious claims across its brands. The insurer says fraudsters are becoming increasingly sophisticated, using AI-generated images, manipulated documents, and fabricated accident scenes to support false claims. Motor insurance accounted for the majority of the cases, with Aviva reporting a shift away from staged collisions and towards exaggerated claims for vehicle damage, repairs, hire cars, and personal injury. At the same time, the insurer says it's using AI and advanced analytics of its own to detect suspicious activity more quickly, highlighting an increasingly familiar trend across financial services. So yes, I don't think this one comes as an enormous surprise that claimers are using AI to kind of augment their claims. This is sort of the bad side of AI in terms of how, it can be used to manipulate images in particular to show bigger dents or scratches or whatever you're trying to prove. But at the same time, we also have AI fighting AI in terms of how Aviva is using the AI to detect sort of fraudulent claims. And so these also serves as a reminder that fraud isn't a victimless crime. Insurers argue that fraudulent claims ultimately increase costs across the system, contributing to higher premiums for legitimate customers. So yeah, please don't do that, guys. You're making it worse for everyone. But yeah, this is just another example of how AI is rapidly changing the nature of financial crime and the tools that firms need to respond to it. So that was sort of last year's amount of bogus claims. We'll see what the 2026 numbers look like, but I imagine they're going to go up before they go down, unfortunately. But now I'm going to take us into our "and finally" section, where we have an accidental billionaire story. a man in Turkey became one of the richest people in the world without realizing it. This story from Euronews: a man in Turkey briefly found himself among the richest people on the planet, at least according to his bank balance. Ahmed Yangharid Takalo, a 32-year-old living in the eastern Turkish city of Van, discovered something was wrong when his bank card stopped working during a trip to the supermarket. After contacting his bank, he discovered his account appeared to contain almost 1 trillion Turkish lira, equivalent to roughly $21.8 billion. That would have made him richer than many of the world's most famous billionaires. However, he has absolutely no idea where this money has come from. The bank quickly froze his accounts and launched an investigation, leaving him unable to access any of his money while the review continues. According to local reports, Takalo even asked AI what someone could do with that much money, with suggestions ranging from major infrastructure projects to buying vast quantities of gold. So, panel, if you wake up one morning and discovered $21 billion sitting in your bank account, what would be the first thing you'd do, Merusha?
I must say, when I read the story, I just thought to myself, I am clearly a very risk-averse person, because the first thing I would do would be to contact my bank. I think, being in the financial services space, we are trained to, question the data and, dot all the I's and cross the T's. So I think from my lens, the first thing I would do is really just check if it's accurate. And I think we've seen a couple of stories where this has happened in other areas. I think the one lady was a student, actually used the funds, and then I can't remember, but I think she either was arrested or went to prison or something like that. So for me, it would always be call the bank, check if it's real, that kind of thing.
Maybe don't buy a private island.
Don't buy a private island. I must say, I might invest in the gold piece. That would probably be my first.
Yeah, true.
Stable coin.
I mean, I'm sure I could think of things to spend 21 billion on without having to ask AI.
Yeah.
But
we wouldn't need AI at all.
Deanna, what was your take on this one? Obviously there is an issue that kind of connects all of our stories around, what happens when your bank balance isn't correct and you don't know why, and you actually don't know how this happened in the first place.
Well, first of all, I think it's a great dinner party question. I might save that for the next time I'm hosting, and one that's hard to answer. I think the thing that really resonated with me when I was thinking about this was the fact that the man to whom this happened, one of the first things he did was to go to AI to discuss that. And in lots of ways, it doesn't really surprise me. I think lots of us have seen the data around, lots of people are using it as a kind of a way to confide in. Lots of people are using it as kind of like informal therapy sessions. I mean, even the Mental Health UK have said that 1 in 3 are using it as mental health support. And there's that link between mental health and finances and being something that is quite private, that it can be awkward to talk about money. And it might be awkward to talk about money because you're in problem debt, or it's awkward to talk about money because actually you've just had a great promotion, you're earning a lot more than your peers, and it's a bit uncomfortable to kind of be open about that. So there's lots of different ways that can happen. And it's interesting, actually, OpenAI have just launched their financial support function in the US, where you can actually connect all your accounts and get financial advice of sorts. So there's lots of really interesting things that are happening out there. But really what this reminds me of is that talking about money can be uncomfortable, which is why often when people are in problem debt, they don't turn to debt advice until it's about 18 months too late from the time that they've started experiencing issues. So I guess part of this is also a bit of a plug to say, if someone's who are listening to this, somebody who's got issues with money or is struggling, encourage them to talk to a person, maybe in the future to AI too, but for now to a debt advice organisation or to somebody else, because it can be awkward talking about money. So I can see why the man in Turkey decided to choose to do that.
And also, to be fair to him, he literally, while they were figuring out how this went wrong, he couldn't access any of his money, which also puts him in a very difficult position.
Yes, I did think that. I thought that's quite unhelpful for somebody who's trying to do the right thing.
While also publicising what's in his bank account, which equally leaves him vulnerable to robbery, I should imagine, as well. But May, what was your take on this one?
Yeah, I mean, it just kind of comes back to, what we were talking about at the top, at the start, which is about banks need technologies like high assurance programs to make sure that these sorts of things don't happen, whether that's AI or that's, bog standard controls. something somewhere in the system went wrong and controls failed at some point in the cycle. The appropriate flags weren't raised. And this thing obviously happened. So I'm sure, within the bank I hope within the bank there's going to be a post-mortem of how it happened, but also how you correct it, and ensure that it doesn't happen. And the worst is, if it was 21 billion, obviously, someone, this poor guy, Takalo, noticed it. But what happens if it was, £10 out or £1,000 out or £10,000 out? Those sorts of things can go easily undetected. And the worst is if it was on the wrong side of the consumer, So those sorts of things, consumers do need to be protected at scale. And that's why, high assurance type solutions are super important for a financial institution.
Yeah, absolutely. Because, it is kind of hilarious that he ended up richer than, Bill Gates because of a clerical error, but he equally meant that he couldn't access any of his own money, which is, it doesn't help him pay his bills day to day. And obviously an error like that is so obvious to spot, but obviously slow to fix if he was sort of blocked from everything for a little while. So yeah, you're totally right. Like everything needs the right checks and balances, but the customer shouldn't necessarily pay the price for an admin error within the institution.
Yeah, it's got to be about balance, right? You've got to be able to protect your customer while still fix your own clerical error. And I think that's where when you have these, these errors which are of this massive size, that's where banks kind of, all of the customer experience tools go out the window. So we have to get better at that.
Absolutely. But I'm going to end the show there. But I think, we've talked about this at length, but it all resonates that, sort of access, inclusion and sort of fair checks and balances are kind of what makes the whole system so much better. But thank you so much to today's guest. Thank you so much for joining me today. Where can people find out a little bit more about you and your companies? Starting with you, May.
Yep. So I'm on LinkedIn. I can also be found on our Anthemis page, as well as the CommonAI website. And a little bit more about CommonAI. We've had a number of really great press releases that have come out, so feel free to read about it. Google AI, I guess. Find out a little bit more about it through AI.
Fantastic. Thank you. Deanna?
Thanks, Laura, and lovely to be on. Listeners can find out more about Fair4All Finance by either Googling Fair4All Finance or going into our website, which is justendswith.org.uk. We're also on LinkedIn and other channels. Particularly interested to talk to banks and digital banks who want to try something different, who want to serve customers they've not been able to. Likewise, insurance providers. It's not something that we spoke about a lot today, but over 26% of people in the UK don't have any insurance at all. So another really important tool to have financial resilience. So also launching some interesting pilots and work around that. So kind of anyone who's interested in the space, please do reach out to us and we'd be happy to connect.
Fantastic. Thank you. Merusha?
So as usual, people can go to paymentology.com or access the Issuer Academy on LinkedIn, Spotify or Apple Music. And please also, listen to our podcast on the Issuer Academy, always trying to demystify payments and make it nice and easy for everyone to understand. And then for myself, you can find me on LinkedIn.
Wonderful. And so for me, you can find me, Laura Watkins, on LinkedIn or check out 11fs.com, or hopefully you're already subscribed, but please do keep listening to this podcast, Fintech Insider. And that wraps up today's episode. Thank you so much for listening. If you've liked what you've heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, please feel free to share the podcast with a colleague or friend. And as always, if you want to join the conversation, find us on social media, search for 11fs or Fintech Insider, and we're on basically all platforms, or email me and the team, podcasts@11fs.com. Thanks again, and goodbye.